Talk some more of the earnings from overnight. Thanks, Kevin Hanks, for the setup there. Renita Young with me, our senior markets correspondent. Let's talk chips again. Marvell's kind of the day two follow-on to Nvidia. Numbers seemed all right, but maybe not enough considering Nvidia faded. I feel like we're going to be on a little nerves today with Marvell.
I think we are, right? But there is some hope coming from what analysts have to say about this stock. We'll get to that in a minute. But earnings and revenue, they did just beat expectations. However, revenue fell about 12% year over year. And that earnings number was at 33 cents a share. And it was just above the exact estimates. Revenue came in at 1.34 billion, also just above the estimates. And it was the AI revenue growth that the company wanted to come in a lot stronger than what it did. So that's why Marvell is giving all these expectations that Marvell will have stronger AI revenue growth in the fourth quarter. They're expecting the growth to hit $200 million for the fourth quarter alone, and then accelerating from there. We're a couple quarters out from the fourth quarter, and they're already giving those expectations, which means that they want us to believe, But so far, it looks like analysts, they kind of have hope for it to do the same. At least one analyst, KeyBank, said that they believe that Marvell could actually generate more than $500 million in the current quarter in AI-related revenue, and then at least reach $1 billion in the second one. And actually, that's $500 million in AI-related revenue in the fiscal year, not the current quarter. That's what KeyBank is saying. But so far, analysts are holding on to their expectations for this stock. I didn't see any downgrades. I didn't see any price target cuts yet. So far, companies are holding on to their bullish ratings. We did have one outlier, though, that rated this stock a sell. Okay, so with Nvidia, too, we didn't really get, look, it's only been, well, we're not even open yet, so it hasn't even been any official trading hours since that stock yesterday closed flat. I wouldn't really expect to see a lot of bearish commentary come out from these earnings because of the price action. That might just be the market's problem because it got too over its skis and bullish in these names and valuations driven up. The numbers aren't bad here, but there's definitely even still a pretty big gap between Marvell and then Nvidia, because Nvidia's already delivering these huge numbers, and then Marvell's kind of still promising a little bit. The trailing stuff here, it's fine to beat on the margin a tiny bit, but not exactly in a blowout number. And I guess the name of the game is, as long as you can promise just enough to have the expectations of analysts continue to stay higher, then you're fine until you can actually meet those expectations. Well, we're down to $55 right now for Marvell, so it is coming off a bit. I'm not surprised to see that. Let's flip it around. Let's talk Workday for a second, the cloud names, because there's actually a bunch of cloud stocks reporting, and there's still many more over the next week. This was a good response at first last night. The numbers looked pretty clean. They did, and so that's why adjusted earnings, revenue came in better than expected for the company, and the AI and machine learning parts of the company did very well this quarter. That's why Workday touted them in their report. So adjusted earnings came in at $1.43 a share, above estimates. Revenue grew 16.3% to $1.79 billion, above estimates. When we look at the 24-month subscriber revenue backlog, it was up 22.7% to $10.27 billion. Total subscription revenue backlog was up 32.5% year over year to $17.85 billion. And the company said more than 3,000 customers are now sharing their data with its machine learning models, and more than 50 million machine learning inferences are processed per day. So here's a company with actual numbers that go behind their efforts that they're pushing through and that they're flaunting during this. The company also said that more generative AI capabilities will be rolling out in the next quarter. Okay, so they've latched themselves onto this theme as well. But in the meantime, the employment situation is strong. The general workforce is robust. Some of the tech companies went through layoffs last year, but right now we're not seeing any major layoff waves across America. So Workday should be generally just in a good place economically. And that's why they raised their guidance as well. That to me seems like it's a little bit more of a grounded report. They're sprinkling in some of the AI stuff into the guidance and the commentary, but right now it's actually a cleaner
response to the number 2, and I think that's a little surprising. I don't think people really had kind of the cloud and Workday style companies as the potential winners for this week.
Right.
So chips having a little bit of more trouble though. Thanks, Renita. All right, good look here at the earnings responses.